Hey guys, welcome back to the Matt to Million channel, and in this clip I'm going to be running through my top 3 tips to stop or prevent overtrading. So this is intended for people with their personal accounts, but also people who are on that journey to try and get funded through the challenges, or even people with the funded accounts that feel that they're not getting the best out of their returns. Often when people are frustrated or dissatisfied, they always tend to go with trying to get more from the existing wins that they've got, or try to get more wins in general. But one of the biggest turning points for me was actually taking less trades, i.e. cutting out overtrading, that really helped me balance out the quality of the wins that I was getting and cutting out the subpar trades that I was taking that were causing the losses. So I'm going to take you through a few things that I did that I felt helped me and hopefully can help you. And if you find any value in them, and especially if you don't, then just smack that likes up button, hit subscribe if you haven't already. Make sure you've got the alerts turned on so you don't miss when I post my next video. But with all that shameless self-promotion aside, let's crack on with the video. Now, as I just inferred there, the first order of business is to stop bad trades. Now, this may seem like a relatively straightforward one, but I bet that there's a lot of people watching this video who have taken a bunch of bad trades this year, and bunch can mean a whole lot of different things to different people. But ultimately for me, overtrading is linked directly with the dilution of your profits. And what I found is that most people are able to identify a really bad trade versus the difficulty of trying to find the grades of what makes a really good or great trade. In most cases, the bad trades are actually triggered by an emotional reaction or emotional trading, and that's a reaction to something that's happened before. And so pretty much for the vast majority of bad trades that are taken, there's a very specific emotional trigger that caused you to execute on that trade. And so with this being so deeply linked to how you are feeling and the reactions around that, you are the one responsible for understanding what traits you are showing that lead to that emotion for you that is detrimental to your trading. The easiest way to do this is, when it happens, is to start backtracking to understand what things you're seeing happening. It could be that you're tapping your leg, it could be that you start feeling anxious, it could be that you can't get control of your thoughts or that your head's feeling fuzzy. You want to try and understand what the lead-in symptoms are before you get to that peak where you start making bad decisions. Now, of course, there may be other reasons as to why you took a bad trade that could be rooted with poor technical analysis. For example, you may have not really ratified your opportunity with the higher time frames, and therefore you get a reactive response and start taking the trade in the opposite direction. But this leads back to a very desperate move and acting in desperation, which again links back to this feeling piece. So the question is, what do we do from here? Now, a common solution is checklists, and whilst this is sort of what I'm suggesting, I'm not a massive fan of these long checklists that have become a staple part of a lot of the trading education that's out there. I don't think that they are bad, but I do think that when people try and write too many bits in a checklist, it just becomes an exercise to try and create loads of stuff to look busy and look good, but actually it's not particularly productive, and it's really the corporate citizen and the social norm inside of us that's trying to kind of do it for an ego boost rather than for the end and most productive result. But here is my first technique, and the one that I did for myself. You do need to have a checklist of sorts, but for me it should only be 3 maximum. Could be less, but definitely no more. And these need to be questions that you can honestly answer for yourself and commit to answering for yourself before taking every single trade. Now, this is something that can be pinned on a post-it note on your screen, it could be on the wallpaper of your phone, it could be written on your hand in biro for all I care, but it needs to be something where you're constantly prompted by it when you go to take that trade. The second component of these questions needs to be that the answer needs to be yes to all 3 in order for you to take the trade. So you need to phrase the questions in a yes or no format, so that in order for you to take the trade you need 3 yeses, and in order for you to not take the trade it would either have to be 1 no or more. Examples could be, have I considered the higher time frame before jumping in this trade? Or have I taken my time to analyze this setup properly and completely? Am I taking this from a neutral mindset? Or perhaps, am I taking this trade as a result of a clawback desperation from a previous loss or mistrade that came earlier in the day? But the most important thing here is, and the thing to reiterate with anything to do with trading, is that you can pass the blame onto anyone, you can blame any world of external factors, but you are the only person that can put accountability on yourself and force you to stick to this thing. So with this, it is vital that you force yourself to be honest and to go through this process with answering these questions every single time until it becomes second nature. The moment you break it, your brain will know that you've broken it, and you won't respect this added tier that you've now put in place to protect yourself. And in an ideal world, you want to write your answers down, write the yeses down, whether that's on the notes in your phone, whether that's on the post-it note that it's written on, whether that's on the notepad down on your desk, but it creates that break in momentum so that you have to focus on what you're answering and why you're answering it. And as mentioned, if any of the answers to any of your 3 questions are no, then that means it's a no trade. So 1 no is enough to stop you from taking that trade. Now, the second technique that I invoked kind of comes off the back of the first one, but I still noted all the trades that I didn't take in my trading journal. So if you are a trading journal person, then you can add that in. You can either highlight the row or column in a different color, or you can categorize them if you've got them in lists, just so as you can go back and look at it. If you aren't a journal person, which if you're in a stage of over trading and trying to find your way, I would suggest that you should, then the next best thing would be leaving the plot on your trading view chart and just changing the color of the profit and loss so you can easily identify it when you go back to do a trade review. Now, this isn't an immediate fix, but it does work really well compounded over time when used in unison with technique number 1. Now, you just do that as part of your habit. Obviously, if you do go through the journaling route, as I said, you can then run more stats in terms of understanding the data a bit more and quick reference to it. But even if at the very minimum you do just change your plot color on TradingView, you can go back and maybe in a quarterly review, you can head back and see which trades you didn't take and what the eventuality of those were. What you'll often find when you review this is that actually there are a whole bunch of losses and really stupid trades that you definitely shouldn't have taken in the moment, and this increases your confidence because you understand all of the losses that you've avoided as a result of those 3 questions and keeping those plotted in your chart. And technique 3 that I invoked was really upon what I introed this video with, was that self-reflection piece of knowing when you're in that angsty place where you're going to make bad decisions and understanding what sort of symptoms, quote unquote, you're showing on the lead up to that so you can help prevent it ahead of time. But simply put, the technique is when you know that you are experiencing that, do not wait for it to amplify. You simply step away from the charts and completely disconnect. And when I say completely disconnect, I mean completely disconnect. It was a problem that I faced for a long time and probably for a good few years, where I kind of said, yeah, I'm stepping back now, but I'd still keep a monitor on my phone now and again, or I'd open up the computer if it was on a spare tab. And the problem is that you're still in that zone. You're still occupying your mind with those thoughts. The whole purpose of stepping away is to create that break, to create that separation so that your mind has a complete rest from actually trying to compute any of the chart and therefore your behaviors and what your attitude may be towards it. Now, of course, I know this is easier said than done, and the whole purpose is that you're trying to get to the earlier symptom rather than at the peak of you being frustrated and creating bad trades. But most people will keep looking back at the chart, whether it's out of anger, whether it's out of frustration, or just sheer defiance in people that they just want to self-sabotage in the moment. But when your headspace is not correct, there has to be 0 argument, 0 problems. You step away, you disconnect, you don't even look at any alerts. This is a time to put your big boy pants on, take some accountability, and save yourself that heartache the following day or 2 days after when you realize what you shouldn't have done 2 days before. Another add-on from technique 2 with this is that you can still put your different color as you were for the trades that you didn't take as a result of this, but you can even add a call out or a note to it if you're in a particularly irate state to see what that correlation is between when you're irate and going to take a short here and then a flip round and along there. How often did that actually play out and how much did you actually save yourself? The other caveat to this as well is that trading is one of the rare industries where poor decisions can be rewarded very well. So you do need to understand that there is always a chance that a trade that's on the flip might actually work out, but the reality is that you want to be trying to understand your edge on a consistent basis to know what you can and can't do and what you can and can't expect. Because at some point it's going to be inevitable. If you keep playing a long, then a short, then a long, then a short because you're getting frustrated because it's going against you, there is a chance that potentially that will eventually play out. But you've got to remember the psychological impact to your trading in your mind, but also to your emotions and how torn down you're going to get with that and your patience. Avoiding overtrading is a habit that needs to be created, and it gets created over time. It's one that requires you to be completely accountable for you and your own actions, and self-reflect in the most objective form to get out of your own way. These 3 steps are some things that I've done that I found a lot of value from in the last 12 years of me trading, so I do hope that you can find some value in them too. And as always, if you've enjoyed this video, but especially if you haven't, make sure you hit that likes up button, subscribe if you haven't already, and keep the alerts turned on so you don't miss when I post my next video. But if I don't speak to you before, have a wonderful rest of your day, and I'll catch you on the next video. Take it easy.